Good day, ladies and gentlemen. It is Friday, April 23rd, I hope. I'm here with Alexandra Woodyer-Sharon. She is the CEO of Empress Royalties, a company that Hard Rock Analyst follows. I wanted to just do an update with Alex because she has now closed a couple of transactions. They did a large financing just recently. Not surprising that financing was used to close a couple of transactions that they've been talking about. And I know she's got, I know she has other ones in the wings that she can't necessarily say too much about, but I just wanted to kind of get an update in terms of the sort of the bigger picture growth story. You know, what does the ramp look like here over the next, let's say 12 months. I know you have a huge amount of stuff in the pipeline, and that pipeline is something I want to talk about as well, because I think part of what discriminates Empress from a lot of other royalty companies is, by and large, you're creating rather than buying royalties. And you've made it plain from day one that you want to focus sort of production near production, which I think personally is the right place to be. That's why I own the stock. But maybe give us a little bit of insight of how you're able to do that. I mean, it's one thing to just proclaim like, yes, I'm going to go find near-term royalties in construction mines. Doing that in practice, I'm sure, is a little bit tougher. And I think the team that you built and that you work with is a big part of the reason why you can take that approach. So can you just give us your sort of 1-minute intro on Empress, but then maybe talk about, you know, how Empress does things a little bit differently?
Yeah, I know. Thank you so much, Eric. It's great to be back chatting with you. You know, Empress Royalty is a new precious metals royalty and streaming creation company. We currently have 16 investments in our portfolio. 3 of those are near-term cash producers. We are very much focused on the creation of royalty and streams, which means we're providing capital to either get mines into production or expand on projects that are already in production. And we're really able to do this through our partnerships. We have Endeavour Financial out of London. We work very closely with them. They're a global mining finance investment banking firm. So that gives us access to deal flow and opportunities to invest in African projects as well as South American projects where they've had a lot of experience. We have Terra Capital in Australia. So that gives us access to Australian deals, Australian listed companies with projects internationally, as well as Jeremy's been an active investor in the Canadian natural resource sector. So it gives us a fantastic capital markets network. And then we've got the relationship, the strategic alliance with Ascendo Banco, which gives us access to opportunities in Mexico, like Telson and Candelaria, as well as, you know, a great network within South America. So we're not going out trying to acquire third-party royalties. We're not in a royalty trading business. We're very much working with management groups that were known to us in our network and providing them a financing solution, again, to get mines into production or expand on what they have. So it's a little bit more work in terms of the creation side, but that's where our skill set is. We're investment bankers, mining finance experts. So we're able to use our knowledge and our experience and in a lot of cases in larger deals on the smaller side of the royalty and streaming creation business model. So it's a slightly different approach. It's definitely a lot of fun, as well as we're starting to be able to deliver on the investment opportunities that we've been talking about.
Okay, now you want to give us just an overview? You've got 3, as you said, you've got 3 near-term production. Can you just give us a thumbnail on those?
Yeah, so we did the Pinos project, which is owned by Candelaria Mining, and that's a 1% royalty over the entire project in Zacatecas, Mexico. We did that in November. This one should be in production Q1, Q2 next year. And Candelaria has announced they're doing a $25 million financing at the moment. So we'll update shareholders as that one progresses. We executed, funded, and closed on the Manica 2.25% royalty. This is owned by MMP in Mozambique, and this project is under construction right now. It was a $10 million to get it finished. We provided $2 million, and the company itself, the management team, provided the other 8. This one should be in production in Q3 this year, bringing revenue hopefully to Empress the end of this year. And we also announced that we have executed on the silver stream on Talahueto, which is owned by Telson Mining. We announced we've executed on that, and we're just trying to finish off the final CPs to do the first tranche of that one. In this case, it's a great example of our partnerships coming together. Ascendo Banco is providing a $12 million debt piece. We're providing a $5 million silver stream. And then there's the equity portion, which Endeavor and Ascendo both participated in and put together. So it's a full $25 million financing solution to finally get the 60% built project at the moment into production, hopefully later this year, early next year. So those have been our three kind of key projects we've been looking at and working on. And finally now, closing Manica and executed on Talaweto.
Okay. And I updated subscribers a couple of days ago, and I mentioned that I think the Mozambique deal, and during the 2.25% part of the stream, it should be throwing off something like $1.25 million. I know for 43-101 reasons you have to be shy on Talaweto. I already did some simple math with subscribers probably a month ago, and all I can say is that it's a $5 million stream, but the IRR on that thing's ridiculous. You got a very good deal on it. Even management at Telson sort of acknowledges, like, yeah, it was a pretty good deal for Empress, but we were in a go big or go home situation where we needed all the pieces to come together for it to work. And my gut feel is that's probably, as much as anything, your competitive advantage. You talked about your network, but because the network is groups that are putting these packages together, you're sort of in a position to go into deals where company X might be 20% shy in its finance package, and it's like, shit, because finance packages for mines are all or nothing. You've either got enough money or you're wasting your time. So they simply have to be big enough. So if you're the last piece of the puzzle, you can probably negotiate pretty strong terms.
Absolutely. And we can negotiate good terms, but also we're working with management groups known to us. So we're not getting a competitive bid process. We're not out there trying to source from different groups. We know these are management teams that can deliver, that can get it into production. And that's where our comfort level comes. And we're going into countries where we've been before. So we know what the mining jurisdictions and regulations are and how these companies are able to operate and get them into production. So it really is through our network. That's what our strategy was. And, with Manica, that was one through the Endeavor financial relationship that they've known the group for a long time and how to operate in Mozambique. And, same obviously with Telson, with Ascendo and Endeavor there. It really does come down to the relationships that we're able to get access to this deal flow. And they're all experienced. Endeavor's been around for over 30 years in mining finance. So there's a huge network that we're able to tap into to generate revenue for Empress.
No, everything goes according to plan. Empress is good. You have, for my numbers anyway, annual run rate on the top line, several $1 million. I mean, obviously you're going to be bringing deals during that. How does having that, other than the obvious nice thing, having revenue, is getting a revenue stream and having it there on your balance sheet, on your P&L, is that going to allow you to sort of maybe get a little bit more aggressive on the leverage side? Because I know, as we talked about in the past, you don't want to keep doing placement after placement after placement to do these deals. So is part of the game plan, once you've got some fairly stable royalties coming in, that you start maybe leveraging up a little bit and allowing you to grow your balance sheet without necessarily growing the equity part of your balance sheet?
Absolutely. I mean, the focus for us was to get the near-term producers in, which we've done. Now we're really focusing getting production assets into our portfolio. Once we get revenue, Empress really shifts and takes a different form. Right now, we're still very young, we're growing, but once we start getting revenue in, it attracts different types of access, or it gives us different access to capital, whether that's, some kind of debt, or whether, there's different opportunities available to us. Again, we're dealing with pretty sophisticated mining finance experts within the team. So we'll look at all options and decide what's best for us and our shareholders as we grow. And we're just seeing a lot of opportunity at the moment for investment. So how do we match that with where we're at and our growth cycle? So we're vetting a lot of stuff right now. It's been exciting building our portfolio, our pipeline out.
Yeah, and I guess once you get to that point, I'm oversimplifying it, but it's financial engineering. You're just looking for deals where there's going to be enough spread between the IRR and what you can get money at. And does having you know, just having Endeavor around, Ascendo around, Jeremy around, I assume that probably has a positive impact on the kind of rates you'll probably be able to get down the line.
Yeah, I mean, they're Endeavor's experts in negotiating debt financings and debt facilities, right? So we've got that. We've got to send those same thing. So, you know, Jerry with the capital markets, we definitely have opportunity, but we want to get the company positioned to the right point with the right revenue coming in to get them as attractive rates we can get if that's the route we go. But
Yeah.
you know, right now it's just focused on it's been focused on getting Telson moved forward and executed, funding Manica. And now we're focused on our pipeline and getting some revenue generating assets some production assets into the portfolio, which we're working on at the moment.
And now that you've closed these two deals, I mean, have you got room to sort of add some more? I mean, are you getting relatively close on other things, and you still have the capability to close on a couple of these things?
Yeah, when we went out and did our financing, we raised 16.4. We did that with specific purpose to fund Manica and Telson, as well as give us a bit of room to be able to quickly fund some of the production ones that are more advanced stage for us. So we've got, you know, we're in discussions with over now 12 different companies on term sheets for opportunities. We have exclusivity and term sheets negotiated on 2. One, we'd be doubling the production. One, we've been increasing their production by a third. Both of those are already in production. It's not a competitive bid process. We're very close with management. So we'll see what those shake out. Again, it's got to come down to due diligence. We know the management team, we're looking at the projects now. But those are the kind of things that we're looking at. And we've, you know, of the ones I'm negotiating term sheets, over half are already in production. So we'd be able to use some of the capital we've already raised to deploy into those to move them forward and advance our portfolio.
Okay, and I mean, it's clear. It should be clear by now that you're sort of the in the room in the deal person. So I mean, like a production company, they're basically doing a royalty deal because it's that last piece of the funding. It's not because you would think of producers are either selling extremely expensive royalties, as a few have. They've done, you know, essentially, you know, wide open bid processes in the case of a couple of majors, and had very, very large price tag sets of royalties.
Mm-hmm.
But in your case, these are companies where this particular growth either generates enough revenue for the producer, or it maybe sets them up to go to the next level. That's why they're willing to do it.
Yeah, in the 2 more advanced ones, in both cases, we've approached the management team. We know what their strategy is for growth, and we know by providing them a bit of extra capital right now, we can double or increase their production, which then gives them the ability to go and maybe acquire something else as well. So it gives them the financial flexibility to build on their business strategy, and that's how we're able to get access to these. And that's, you know, a lot of time it's part of a bigger picture. And that comes down to knowing the groups that are doing these deals and where they want to take their companies. So it's part of the growth story there.
And I'll close this off with one question I got from a subscriber, and it was on Tatueto, and it was, what makes that a stream rather than a royalty if you're not having to pay for the ounces, which you're not. The deal I saw, you make the upfront payments, and you aren't paying for the silver ounces as they come back to you.
So, you know, with Telewater, where that particular project and the other parts of the financing in place and that are going to be coming into place, a stream made the most sense. And that is because obviously silver is kind of a byproduct. So that's why we were able to structure the stream on that one. When we look at other projects, sometimes we're doing a stream and then thinking about doing a royalty after that.
Right.
But it really comes down to everything else that surrounds it. There's one that we're looking at that we originally thought would make sense when we looked at the cash flow model to do a royalty. But when we dug into it, you know, there was other things there that would make a royalty be too cumbersome because of the other royalties all in place. So then now we're looking at re-engineering that and what a stream would look like with one of their with their gold being a byproduct. So it's very much case by case. It comes into when we get the financial information and we dig into the model and we see what can structure. Because ultimately we want our mining partners to succeed. We don't want to overburden them because then they're not going to be successful themselves. We need them to be successful for us to be successful. So that's why it's a lot of the engineering side. And again, it comes down to the team. We've got experienced investment bankers who know how to structure. Usually they were doing them in sort of the $100 to $150 million size. So we're applying that principle to the smaller side of the market in that sort of $1 to $15 million size.
So you, in the case of Telson, you essentially you structured it as a stream so that you could isolate the silver, because silver is I mean, it's mainly a gold project. Silver is a byproduct. So
yeah, and allow them to meet their other obligations as well.
Right. So that doesn't, yeah, that doesn't mess with anything else. It's part of the finance package. Okay, gotcha. That makes sense. Okay, I mean, I think it's a, it's a straightforward story as royalty companies often are. You definitely delivered since you put the company together and listed it a few months ago. It's clear you're going to have a fairly, to me at least, you're going to have a fairly quickly going revenue stream here. And I know you've got a ton of stuff in the pipeline. So it's just a matter of how fast you can grow it and keep the balance sheet in good shape. As subscribers know, I initiated coverage intentionally, and it was intentional when you announced loss financing, because I buy enough bought deals that I have no illusions about how stocks trade during bought deals. Unfortunately, the thing with bought deals when it's a tradable stock with a warrant is you always get warrant clippers, and the downside of bought deals for management is that you don't have any control over the book. The brokers control the book. So I was kind of expecting you to have a dip, even though you just closed the financing that's enabled you to close a couple of deals. This is just the way people trade bought deals. That's just how it is. So I told people, like, it's going to dip, and the dip is your opportunity. And I think that's probably that window is closing fairly soon. I think you're trading enough volume that I think the warrant clippers are just about done.
Yeah, and we also had the free trading paper from our financing when we were private that hit us in late February. So yeah, hopefully we're delivering on our strategy. We're moving the company forward as we planned, and it's just continue to focus on near term or in production assets, and bringing revenue into our company and building out a solid diversified portfolio of cash generating assets.
Okay, there you have it. Empress Royalties, EMPR on the venture. Very good story, very good pricing. Like I said, I mean, I owned it already, but I initiated coverage because I could see there was going to be a price window there. And I don't think the price window is open much longer. And the company's delivered on everything they said, and there's clearly more coming. So this is a story you got to be paying attention to, and your window to do your due diligence and get your best deal as a buyer is, I think, is right now. So I wouldn't take too long with that doing due diligence thing. I think it's an excellent opportunity right now. Thanks for coming by, Alex. Great story. It's great to see everything coming together the way that you planned. It's been very nice to watch things just kind of fall into place going forward.
Thank you. It's been a lot of hard work for myself and the whole team, but we love what we do, and I always appreciate talking with you and your time. Thank you so much, Eric.
Okay, thanks, Alex.